episode 7 of The Compass, live from Beaver Creek. I'm Derek McPherson, Executive Chairman of Olive Resource Capital, and with me as always is Sam Pelez, President, CEO, and CIO. We're here in Beaver Creek, and so it's Thursday of the show, and so we thought we'd give you some initial insights of what we're seeing and what the opportunities are, and what generally the mood is of the show, which I think is always something people ask me when you get back, and so I think we could let everybody know. So, Sam, what's the mood of the show?
I think it's positive, actually. I've seen buy-side accounts that I had never seen before, never met before. Mainly some European type, high net worth, private family office type investors. Mm-hmm. Not so much of an institutional, more institutions that we're used to, typically the same ones that we see here. But I think certainly the mood is better than last year, and it should be. Obviously, commodity prices are higher. And maybe of interest is we have some of the high-profile Canadian billionaire type investors in attendance and quite visible.
I've said that to a few people that it surprised me. We've seen Frank Giustra around, but not just kind of hiding out in a suite. People going up to see him. He's out meetings. Seems like he wants to get pitch stories, and so that part I think is really interesting because Mr. Giustra doesn't have to. It doesn't have to make money. It doesn't have to invest in junior mining stocks to make money. But I think he sees, like we do, that there's an opportunity here at this moment.
I think the fact that he's out and about is just this sign that is like he's open for business. Like he's willing to entertain people approaching him, pitching him new ideas. And I think that's the key part of it. Another interesting character that we've seen around is Michael Wekerle. I had seen him at crypto conferences a few years back. But I hadn't seen him around the mining industry for, I want to say, 15 years. So he's also out and about here looking for opportunity. So there's certainly more of these, big names from the previous cycle that are, kind of like re-emerging. And you would argue that they have that sniff test, that they know that something's going on and they're looking to take advantage of it.
Yeah. One of the things that I would have said last year, and it wasn't my phrase, but one of our contacts, but last year felt like a bit of a wake, right? Everyone was here, but there was a lot of optimism. Whereas this year, I think the optimism, or quiet optimism, people believe it's turning. And it's interesting. You're talking about this. You were sat through the keynote yesterday. We were talking about gold price and kind of consensus view. I think it's an interesting comment.
Yeah. So yesterday in the evening, we had John Hathaway and Ronald Stofferle giving sort of like a back and forth about their views on gold. There were lots of questions. One of the things I learned was that I came here with the view that gold's going to pause, consolidate over the next couple of months is what's typical. I've learned now that that's the consensus view, and as the consensus view, you're guaranteed that it's not going to happen. And I started wondering if that's the consensus view, what could be the surprise? And I started thinking to myself, what if next week we have the Fed meeting, the September Fed meeting right after the Denver Gold Show? That's typically one of the biggest volatile days for gold, and typically to the downside. The rate cut is pretty much telegraphed. What if we are all surprised next week with gold, I don't know, running to 2,700 out of that announcement, and no consolidation event where people are kind of waiting for the opportunity to scoop up more gold projects or more equities in the next 60 days. And what if we don't get that event and we actually get like that break to the upside, and then everybody's scrambling to get position into it?
It certainly will be interesting if that happened. I mean, I don't know how many charts I've seen on Mintwit or on different commentators on how September is seasonally weak for gold. Like we even talked about it. We talked about it last episode, right? That there's an opportunity for a pullback here. So we're expecting a pullback or consolidation. We're not positioned that way, but that's neither here nor there. I guess looking at okay, so we're here. We've got quiet optimism. There seems to be a very solid consensus view that gold's going to pull back. There is a possibility that it doesn't. And it's not just, I don't think it's just a mining industry consensus view. I think if you look at broader macro commentators. I think that exists as well. So I think that's an interesting dichotomy. So I guess the third third thing to talk about is what have we seen that's interesting? Now, we haven't had all our meetings yet. We haven't seen all the presentations we want to sit in, but there's, what are names that positively surprised us?
I want to say, to preface that, one of our big themes has been M&A.
Right.
We had two meaningful transactions that were announced early this week. One was Anglo taking out Centamin. Centamin is nearly 500,000 ounce producer, brings Anglo over 3 million ounces. Paper and cash deal, certainly meaningful. Centamin had been approached by Endeavor right around the pandemic 4 years ago. That didn't work out, but again, big player being taken out by one of the larger players. We've talked about Anglo. We like it. They're being very aggressive, and if the market proves them right, I think they're going to be very successful. Second, and not less meaningful, a smaller company, Australian company listed in London, Greatland, run by a former Northern Star CFO, who's a great character. I've known him for years. They're taking, call it 1.5 assets out of Newmont in Australia that were openly for sale. But the most meaningful part about that is that the biggest backer of that company is Andrew Forrest from Fortescue. Huge billionaire in Australia, one of the biggest characters in the mining industry. And effectively, this comes with a huge capital raise, and the expectation is that he's going to be the largest check. So we have big, meaningful capital from other parts of the mining industry coming into gold at this time, and I think that's important to preface the names that we like. And one of our big themes is positioning in things that we have high degree of confidence that will be mines. Like, we look at it, has the grade, has the tonnage, has the future prospectivity, grade-wise, scale-wise, also good jurisdiction, et cetera, things that we think have a great likelihood of becoming mines either by a takeout or by a organic development and building.
All right, so let's start with Bravo Mining, right? So Bravo is one that we own. We found it here last year at the conference. We liked it. We didn't buy it right away because we were waiting for it to pull back. We made money trading it on that basis, and we're still shareholders. But I guess, the reasons we like it: significant PGM deposit, which obviously is unloved, made a significant copper discovery. But you sat in the presentation while I was taking another meeting. The color from that, I think, is actually very interesting.
The difference in crowd relative to last year, same presentation, same CEO, same company. This year, we had some of the big hitters in the space in attendance to the presentation. I think a big part of it is the fact that the resource has increased, the known resource has increased, but also they had this new IOCG copper discovery on the same block. So you effectively now have two projects in one, and the one original one is nothing to discount. It's 10 million ounces, 1.5 grams a ton PGM equivalent. But if you really look at the pit outline and where they're drilling, it's probably going to go to 20 million ounces. Like, that's just the type of tier one that we like to talk about. And on top of it all, now you have this incredible IOCG, still, we think it's an IOCG system. They, only a few holes into it right now, but every new hole is hitting the structure. And I think this one is, it's a winner.
Yeah, I think that's good, and it's always one of the advantages of being here is you can see like who's in the room and who's looking at it, and that's a big change from last year to this year. I think another one that we met with that we don't own, that we met last year and then didn't buy and missed a bit was Spartan Resources out of Australia. Stock was we met. I've known the chairman Simon Lawson. I've known for years, and another ex-Northern Star guy. And I sat down with him. I looked at it. It looked interesting. He'd taken over a company that was producing. He had taken a step back. They'd shut the mine down, started drilling, kind of cracked the code of exploration, has just been putting up ounces. And so that company was 185 million market cap, and we saw it last year. Aussie. Today it's 1.5 billion. And, I walked out of.
If you're watching us from Australia, you know exactly how we feel.
Yeah. And so we looked at it and went, oh, well, that's a miss on our part. But then as your first reaction is when you miss like that, you're like, all right, we missed it. It's gone. But you're like, okay, well, let's go see what it's all about. And so I had a chance to sit down with him. I met, and it's that good. It's one of those things that is going to be a mine. It's 2.5 million ounces at 5 grams right now, but within that, there's probably 1 million ounces, 1.5 million ounces at 8 grams. We've talked about, I asked questions about capping and things like that, and it's, they're designing it like it's a mine. But it's the thing that is impressive about it. It's not just it's high grade, it's 14 meters wide. That kind of width is what people want, right? You can put big equipment in an underground mine, you can run throughput through it. And so that's, I think from an opportunity perspective, it looks really interesting. And, this isn't a 2.5 million ounces at 5 grams greenfield site. This is 2.5 million ounces sitting on a past producing site, fully permitted to go back into production. They've got 93 million in cash. They're building an exploration ramp, but it's twin decline. So pretty sure that's not going to be used for exploration. It's not only going to be used for exploration.
It's a real thread that they're going to build it.
Yeah. 65,000 meters of drilling plan for the next year from underground, so they can test some of these other targets tightly. They've started to transition the team to more mine builders. And so that's the aspect that, you look at that and go, okay. And you've got Remelius in the market, effectively almost a creeping takeover of it. They bought 18% of the company in the market. And so I think that there's a high probability it gets taken out. There's a high probability that it goes higher from here as they drill this off and expand it. And there's part of their thing is that now that they've sort of unlocked the geology, there's more opportunity on the property to do it. So that was one that jumped off the page at me is, we missed it, but I don't think
it's not over yet.
It's not over yet. Yeah.
It's a mine.
Yeah.
The other one that we actually own a fair bit of it, and we quite like it to the point that Derek decided to join the board, is OMI.
Yeah.
I actually saw Elaine, CEO, presenting this morning, and the story is very articulate. Past producing site, so disturbed site, government that favors the development of the asset, which is kind of like not common.
I would say that the government of Guyana, that mine can't be built soon enough in their mind, which is a complete sea change from a jurisdiction perspective.
High grade by any measure, doesn't matter how you want to slice it, but it's a combination of open pit and underground, two deposits, open in pretty much every direction. They put out a PEA earlier this year just to prove that there's an economic development path for this, but more importantly that some drilling is missing for the cohesiveness of the ore bodies. So you can expect, I think that 2.4 million ounces on that pit, not all in pit, 2.4 million ounces of that resource on that side, but you can expect that to be infilled, and drilled further at depth. So the resource is certainly going to grow, but it's already enough that you can visualize it as, again, it's going to be a mine.
The key thing there, and obviously I know a little bit more as a director, but there's a continuity to the deposit. When it was mined, there was a clear continuity that is there, and that's just it's not in the drilling yet. And I think that really shows. You mentioned it, and I've seen as well the slide that Elaine has where she slices through the deposit, and you can kind of see where there's this continuity. So I think we continue to like it, and I think there's an opportunity, but obviously I'm a little bit biased.
Well, when you think about it, Reunion got taken out at I want to say $150 or $200 an ounce. I forget the number now, but on the existing resource at OMI today, you're trading at a fraction of that, probably 1/10 of that. And the resource is growing and will continue to grow based on this infilling and the drilling at depth and along strike. So you can expect that resource to be bigger. So again, lower value on a per ounce basis. The company is well funded for the drilling they're doing right now. I am surprised, frankly, that thing is still around. It's a mine, 100%.
Well, I think not to toot our own horn a little bit, but we've started our entry point was about 4.5 cents there. Initially, we started buying at 4.5 and 6.5. Probably built most of our position, and we're not sellers here because we see that there's much more to go on it, and I think that I didn't join the board because I joined the board because I like working with Elaine, but I also joined the board because Elaine's very reputable and a very good manager. And so that, that aspect of it means that it's in good hands. You don't need to crystallize that. We don't need to crystallize that gain because we know that there's
on the right
upside
track.
here. Yeah.
Yep. Any other specific tidbits that you want to mention?
There's been a few. There has obviously, there's, as always, when you're at these conferences, you just kind of run into people and you get an update on something, and there's companies that probably not, that we need to do more work on before we talk about it here. But I think that, there's, again, that quiet optimism and some good opportunities. And I think that's where we are. What about you? Anything else?
There's a known PGM company with an asset in Brazil. It's not Bravo, it's another one. We like it. We think there's going to be some transformation there. That one we met with here, and we quite like it. And I think other than the ones that are obvious mines, we're looking for those little opportunities where something is kind of, renaissance in a sense, where starting got tired, either new management coming in or new cap structure or some sort of transformative element that gives us a new life. In particular, in these types of commodities that have been significantly underwater, like PGMs, we have started looking at lithium. Our lithium exposure is with majors. We have started looking at lithium as an opportunity. Nothing yet. This is not a lithium conference by any measure, but obviously
but there were a lot of lithium companies here last year, which there aren't this year. I think that's probably notable.
And I would actually say that Rig Rule gave a presentation, I think it was Tuesday. And I like the way he presents this concept of the hated commodities, and you have to look for opportunities there because that's the point where you can get positioned into the stories. We're seeing some of that here through our meetings with, with people that we know and some of the projects that are in their orbit, but that perhaps haven't had the success that they deserve yet. And there's some opportunity to participate at this point and get positioned for a new renaissance or the new life of these projects and companies. So we've seen quite a bit of that, and I think that's healthy and positive for the sector, and it obviously showcases that there is optimism underlying this whole theme.
Yeah. Okay. Well, that's it for episode 7 live from Beaver Creek. Next time we'll talk to you will be episode 8, and we'll be back from both Beaver Creek and have finished all our meetings and presentations we wanted to see here, but also gone to Colorado Springs. Big focus for us at Colorado Springs is sitting down and watching all the majors present, and that's on Wednesday. So starts on Tuesday morning. So it'll certainly be interesting. Interesting episode when we get back home on
late next week.
Late next week. So thank you.